My name is Ezra. I'm excited to be in here to tee up today's profit panel. We got a great panel lined up with Alex Reid, Geof Smith, and Chris Pulver. So welcome everyone. Just seeing a bunch of people logging on right now. Edward, James, Lothar. I hope I'm pronouncing your name right, but we got a great event teed up for you. A lot going on in the markets this week. Um, Alex will be breaking down the market and sector outlook, sharing some key SPX levels. And as always, we hope to leave you guys with some juicy, high potential trades. Um, yeah, today should be a good one. I'm just checking in with the guys. We got major earnings coming up, more Fed decisions. Obviously, a lot of controversy around Jerome Powell, and President Trump keeps demanding that he cuts rates. Let me fix my hair here, folks. But got a great panel teed up for you. I think you guys are going to love this one. Markets are opening up today. Big news over the weekend. President Trump inking a deal with the EU, obviously one of America's most important trading partners. So markets should be off to a strong start. The Dow is actually down a hair. S&P 500 up 0.1%. Nasdaq up about zero point 0.3. Um, definitely a good day for the U.S. markets. People in Europe are on social media are a little mad about the deal. President Trump not very popular over there, and so they kind of view it as capitulating to President Trump. But the United States is the 800-pound gorilla in global trade. We have a lot of weight to swing around, and that is exactly what President Trump is doing. Um, Crypto, which has been on an amazing run this year, is still doing pretty well. Bitcoin hovering around 118,000. Ethereum creeping up to the 3,800 mark. So, congrats to anybody who got in on this recent crypto run up. Excuse me. VIX up a little bit today to about 15.3. That, of course, is the measure of market volatility. Historically high, but lower than the initial trade war craziness. Gold hovering around the 3,300 mark. So should be shaping up to be an interesting week. Certainly up to a strong start, though. Like I said, the Dow is down a hair, and the S&P and Nasdaq are only up just a little bit. So it remains to be seen the full impact of this trade deal. But coming on the heels of a trade deal with Japan and then the trade deal with the EU, I'm feeling good about things. Let me know what you think in the chat. Welcome, Carolyn, Edward, James, Jimmy, QHE, Lothar. Again, I hope I'm pronouncing your name right. A bunch of anonymous iPhone and iPad and Zoom users. So great to see everyone in here. Appreciate you guys tuning in. We are live. We go live every day at 11 a.m. Eastern. So it is Monday, July 28th. And we go live for two reasons. The first of which is so we can respond to real-time market conditions. The second of which is so we can respond to you. So please don't be shy. Say hi in the chat. Let us know who you are. Let us know where you're tuning in from. I see some new names popping up on here. So especially if you're new to our events, please drop those comments. Please say hi. Want to hear from all of you. How is your trading week starting out? I know mine is looking solid. I think I personally have a little too much cash on the sidelines, so trying to figure out how to deploy that to the best available way. So let's see what the other big breaking financial stories are for the day. Hi from Alabama, Jimmy from Alabama. Welcome. Good to see you in here. Hope this summer heat is not too bad in Alabama right now, but Glad to see you in here. Let us know. We always get a big Texas crowd. Let us know if my Texas folks are out there today. So, of course, the markets are still flirting with all-time highs, especially on the heel of these major trade deals. China is still, obviously the elephant in the room. President Trump and his team are talking with China this week. We will see. Let us know in the chat. You think they can get a deal done with China? They just, the EU is being pretty recalcitrant, so managed to get that done. And do you think they can get it done with China? I'm kind of 50-50 because there's this problem here kind of on all sides. And we saw this with the EU trade deal, but even if the leaders want to make a deal, I think they probably do. They understand how important the U.S. is as a trading partner. But there's this domestic political pressure. Even if Xi Jinping wants to make a deal, he cannot afford to appear weak. He cannot afford to appear to be capitulating with President Trump. President Trump facing some of the same pressure. So, even if these leaders want to make a deal, they have domestic political pressure, to kind of save face and frame it as a win. How's it going, Geof? Good to see you back from a vacation, right? Let me see if Geof, can you hear me?
Ah, there it goes.
There
Some
he is.
Zoom changed my settings.
Good to see you, man. You were on vacation, right? How was that?
It was awesome. And of course, it went way too fast.
Does always does.
Yeah, yeah. But yeah, we drove up to Colorado and spent about 8 days up there and drove back. So,
Oh, great. What part of, I'm based on Colorado
ah,
myself,
uh,
broadcasting from the Rockies.
there you go. We go and visit around South Fork, South Central, down in the San Luis Valley.
Okay.
So, yeah, we
Pretty rural.
Yeah, yeah, yeah. We got family that. Well, my wife is from up in Creed, Colorado, a little town up there in the mountains. And so she's got a couple of sisters there, and then a couple of them that live up in Denver, and they all come down. So we kind of spend the whole week together.
That's
So
great. You get some hiking, some mountain biking.
yeah. Well, one thing, and that's one thing we never have done. We went over to Chimney Rock. I don't know if you've ever been there,
I
but
haven't.
it is awesome. It is really a cool thing. It's kind of part of the Chaco Canyon stuff, and
Okay, I'll look that up.
yeah, but it is right there outside of Pagosa Springs. So
Okay.
I've never been there, and I've heard of it, but I never have been there. And so we all went over there for the day, and it was awesome. I mean, you ought to go check it out if you have time.
Yeah, I need to talk about making time. The markets don't quit.
Oh, I
How are
know.
you feeling about how you feeling about this week, Geof, on the heels of the EU trade deal?
Well, I mean, that's the thing. When I do my best to kind of keep my brain off the market when I'm on vacation. I come in this morning and run around with my head cut off. And I mean, they're starting to get all these trade deals done. And not only that, we got Fed on Wednesday. We got all these freaking Mag 7 guys coming out. So it's going to be kind of a wild week. I mean, the big question is we've got a little pullback today, but I mean, are the mag guys going to kind of try to push this thing back up again? Or do they kind of wash and rinse some stuff out a little bit and kind of help things correct back some? I don't know. When we're right at the end of a month. And a lot of times you'll kind of see everything kind of, chill out, correct back or whatever into the end of the month. And then the next month starts off and we'll have to kind of see what's going on then. Then, of course, then you got China and all
Then
their
you got China.
yeah. And then you got all their
Yeah.
stuff going on. I mean, they're trying to build a new hydroelectric dam over there on some, I can't say the name. I can't speak that language, but it's supposed to be huge. And the big question is, I mean, they're, a communist country, and so they have to kind of generate their own income somehow. And their economy is not doing all that great. So they get this dam going. All of a sudden, you got to know concrete and steel and all this good stuff, hydroelectric power. But they're wanting to generate somewhere around 60 gigawatts of power, which is 3 times what they do on another dam that they have. So it'd be really interesting to kind of see what they do with all that. So,
Chris and Alex, welcome. We're just catching up with Geof back from vacation.
Yeah, yeah, man.
Great
How
room
was it?
today.
how you guys doing?
Doing
Miss
great.
being around you.
I'm good, man. Did you get some good rest and relaxation in?
Oh yeah, lots of that and lots of hiking and biking and all kinds of stuff.
Nice, nice. Was it hot or was it kind of like high up in the mountains?
Oh no, we're up around 8,000, 9,000 feet. So it was really nice. I mean, it would get warm in the mornings, rain in the afternoons, and I mean the monsoons are coming in about that, this time of year. So, but I mean, it was really nice. It'd rain between about 1 and 3, and after that it'd clear up and be all nice and pretty again. So it was really, really a nice time.
That's
Uh,
dope. You like what part of Colorado again?
It's the South Central. We stay in a town called South Fork. It's in the San Luis Valley. It's just over Wolf Creek Pass from Pagosa Springs. Everybody knows that town. So, but yeah, we stay over there. My wife is from there. She's from a little town called Creed, which is a mining town, and that's where all her, 5 brothers and sisters were raised. And so we always go up there and meet the family and all that good stuff. So,
Oh, nice. How
yeah.
did you make your way down to you're in Alabama, right?
Yeah, it's a 1,350-mile drive there.
That's crazy. That's crazy. I love that about America, man. We're like one of our states is like a European country.
Yeah.
It's like probably longer than Europe.
Oh, yeah. I mean, but it's a beautiful drive. I mean, we go across, Mississippi, Louisiana, Texas, New Mexico into Colorado, and it's really, really pretty just, take the drive and everything like that. Plus, you get to see, different people, and you get to kind of see how the farm country's doing and everything like that. And I mean, I've never seen West Texas, the Panhandle of Texas, and New Mexico is green as it is. I mean, it is. It's
Oh,
just
really?
beautiful through there. I'm just like, wow, check this out. Because usually it's a desert this time of year.
Hey, it's
I
all
mean,
that rain they got, right? There was all
brown, but it is really, really green.
yeah,
So,
yeah.
but more power to them. Glad they're getting the rain.
That's awesome, man. I'm glad you enjoyed yourself, dude. You excited to be back though? Excited to be back? Got
Yeah,
some
I
got a,
am.
came back for a stacked week.
Oh man, I tell you. I mean, I was just and what was really weird, I was last, this is kind of funny. So last week I was just kind of digging through some things and got just kind of hung up on the SpaceX kind of stuff,
Mhm.
just on my off time. But what's weird is like SpaceX and Sierra Nevada Corp. There's a thing called United Launch Alliance, which is actually owned by Lockheed and Boeing. Of course, you have Blue Origin and stuff like that, but all those are freaking private companies. You can't invest in them. And so I was trying to do my best to try to figure out a way of trying to invest in those companies because they're booming. They're doing really, really well.
Yeah, yeah.
And that's just a sector I think is going to continue to do well. The only thing I could really find was what is it, XOVR. They kind of invest in SpaceX.
We talked about that last week,
You
actually.
did.
Yeah.
Cool. And I was trying to figure out, what's the best way of kind of investing in those things, but you really can't without going into, the big guys like Lockheed or Boeing or, any Raytheon and all those guys. And I don't want to do that. I'd rather get into those things as easy as I could, but they're just, private equity companies. That's just the way it is. So have to be patient and watch and wait.
Yeah, it's a little I mean it's been pretty solid. I mean all-time highs now. I don't know.
Yeah.
I forget, Chris, were you on here? We were talking about XOVR. Was it me and you and Jeffrey? I forget, but
That one doesn't ring a bell. Was that last week? I didn't see that one last week, no.
yeah.
But
Yes.
that's not about. I do have a couple of I have got one symbol that's a private equity play. But it's like broad private equity, which I don't know if it's a good trade or not. But if it's like in SpaceX space, I'm sure that's a really solid play. What is the one that I have? I think it's PEP. No, that's Pepsi. What I'm talking about. Yeah, duh. Oh, PSP.
Private
PSP
equity.
is it's global listed private equity. It's PSP.
Yes.
Yeah, it's up like $1,600. I just bought some shares of this year, a little exposure. When I was doing some diversification this year, where I started to buy like SCHY is like a non-US based Schwab dividend, or it's a Schwab ETF that's mostly Europe and China mix, just in case it's like everyone's down to the US and putting money elsewhere. the U.S. has responded really nicely to actually have this, bottom in April, rip all the way back to all-time highs. I think now like the big initial pop that went into Europe and went into China and went into, even like Brazil and some of the emerging markets, it's all kind of flowing back to the U.S. right now,
Right.
which is probably a good thing in all honesty, as far as like stability. Like Geof had said, just kind of inking this deal in good faith with Europe right now. Japan was a big trade partner last week. Europe's a big one this week. It's not surprising that this is all coming together right before the the August 1st deadline. So part of me thinks that this August 1st deadline is way less impactful than it was had Europe not come to the table. If Europe was still waiting and we had nothing from Europe, other than a surplus with the UK, which we've always had. If Europe wasn't at the table, then I think August 1st would matter more. But now I think this week is all going to be about Mag 7 and the Fed. And so it depends to me how much Trump and Powell are in the headlines. Like, I don't think Powell's going to do anything out of the ordinary, but if Trump is like more Mr. Late, more Mr. Never, Mr. Loser, whatever, if it's that type of tone that Trump takes and we are pushing for this like shadow Fed, I don't know how the market responds to that. I'm still in the same camp. I told traders this just on my last session. I am literally selling tops every day in the S&P. That's all I want to focus on right now, because I think we have to have at least a correction. So you can measure the moves. It's not like I'm just selling the day and expecting price to go lower. I mean, the price can melt up. But with the VIX right now at 15.25.
Speaking of melting up,
yeah.
I just want to draw your eyes. 7,100. I was saying 7,000 SPX. Oppenheimer versus me.
Yeah. But I guarantee you they weren't 7,100, 2 months ago.
Yeah.
It's like everyone was like 6,000 2-3 months ago. Everyone was maybe at 6,400. It's like, so it's all changing. It's the same thing as last year. These like scales of where we could go to the downside or upside, like the left tail, right tail, and the markets are still really, really wide.
Well, today is the first day we have in a long time. Look at that. Look at that tiny little green volatility candle there on the VIX. A little baby candle for VIX. First time in a long time we've had anything like substantial.
For the last how many days? Like 7, 8, 9 days in a row.
Yeah, but then we have back here on the 15th. It's almost been 2 full trading weeks since we've had. I mean, they're just so sparse. They've been so sparse. Before that, it was another 2 weeks.
Yeah.
So
the potential for the VIX to jump from like 15 to 17, 15 to 19 is pretty high. The potential of, I mean, one thing with August too, it's like August starts Friday. We go into a month where most of Europe and a lot of parts of the world are on leave or on vacation. Like silly things can happen during like those low volume months, like August, September. I mean, coming from the currency trading world as well, currencies can trade like with a lot of volatility. I've seen a lot of flash crashes in August as well. So something like that could get the market's attention. I don't know. It's hard to put a finger on why the market would correct, 4 to 5%, but I don't know if it's going to be more Trump and Powell noise. I mean, the Fed this week probably takes a little bit of the attention because they're looking to pause. That's still the probability. There might be a dissent in the Fed right now between like who's looking to cut rates or who wants to cut rates now, but Powell might stay firm. It just depends. I think a lot of it is like over the next maybe 30 to 60 days, if Trump is still very vocal on the Fed and Powell and wanting to just like lower rates to nothing, it's still not a good thing because ultimately we're going to be told by the bond market. If U.S. yields haven't really budged, right? 10-year yields are still sticky at 4.4. Like there's nothing moving on the long end of the curve.
Yeah, look at what happened last August though. The mags got hammered. I mean, that's what killed it last time. Of course, they recovered that. I mean, going into the end of the month, but that first 2 weeks was just nasty on the mags, especially like Nvidia. Everybody's darling last year just got smacked.
Yeah.
And
was it all mags though, Geof, or was that like the whole Japanese yen deleveraging trade that caught the whole market off guard?
Yeah, I think that was the big thing behind it all. I would just think, but the semiconductors really is what took us down more than anything. But they recovered, of course. But yeah, that was another thing. And another thing that I haven't heard anything about is our dangling participle up there in Canada. I mean, they haven't. I mean, what's going on up there? I mean, that's the one thing that I keep hearing all these trade deals. And it's like they've taken Canada, thrown them in the closet, closed the door, and said, "Well, we'll just talk about them later." It's kind of what it sounds to me like.
Yeah, actually, I don't know. It's so hard to figure out like what actually is happening. Are these handshake deals? Or are these actually like force of state deals?
Well, and that's the thing. You don't have anything on paper. I mean, Chris was bringing this up, well, a couple of weeks ago.
Good faith.
There is nothing on a piece of paper that says this is what we're going to do. And
Right.
until that happens, we have no idea what the trade deal is, really.
Right.
Right. It's right. It's just hearsay. It's handshakes. It's like, oh yeah, this might happen, right? And Kane talked about this with the NAAIM. This is like the I guess the fund managers
Yeah.
exposure. It is interesting. So they've been dropping basically all month long the amount of participation right up into this last week here. So it'll be curious to see, what if this trend kind of continues into August, if they kind of pull out. But you saw they went really really hard into the market at the start of July. But they've been kind of just like decreasing their involvement. I forget what I don't know if we talked about like 80 as a key support level for that potentially for this. It's not really like technical either, but just like watching it to see if it does fall below that 80. And then what happens if they start actually pulling out in mass come next month, right? I mean, because this is like, I think this is really interesting. And for everyone watching this, it is a pretty good little chart because look at that, the fund, all the big money, right? Basically starts getting in, and then the market kind of just follows. When they pull out, then what happens, right? Well, when they pull out, it's seems to be very correlated.
Yeah. I was gonna say on the just sentiment too, it's like we've got a lot of extreme greed hitting some of the sentiment markers. You got call option volumes that's pretty extreme. You still have a lot of leverage in the markets right now.
$1.4 billion market cap fart coin, or maybe it's more.
Oh my gosh, dude. Unbelievable. Unbelievable. I was at, and so I talked about some earnings plays this morning. And I don't know. I don't think I'm not like a bear. It's just like, give me something worth buying a dip on. And here we've had two thrusts since this like melt up started April 9th and was just like a hard pivot April 9th, and then melt up really was kind of fell in June. The US China trade agreement pause, right? Like that pause kind of thrusted the market up, and then the ceasefire, which really I don't know if that was like a big risk on event. It was just another excuse for the market to keep melting up because there's nothing's going to derail or disrupt this global economy. But those were like, if you look at the S&P, the thrust that we saw, it's like two kind of big announcements, which was US and China pause together, and then a ceasefire to not have a war. And the market from that point is just like every single day, every single week has been melt up. Like last week was such a slow week in trading, and yet the market was up like 1.5%. I think the market started out the week with a gap higher and finished the week about 1.57% to the upside. It's like it was a slow grind all week with a little dip on Tuesday, but like Tuesday's recovery into Wednesday's grind, into Thursday's grind, into Friday's grind that was the week. I did have another
last week was insane because it did start like we were going to hit maybe like a little bit of resistance line, start bouncing down Tuesday, a little bit in this, and then no gapped up. The gap up was actually on Wednesday, but we just
gap up Wednesday, gap up Thursday,
and basically, I mean, not quite a gap up, but
I did have another level technically. Print today on my daily chart, which is an overbought relative strength along with price and momentum disagreeing. Can I share the screen here, Alex? So we can go into earnings here. I do want to talk some earnings.
Absolutely.
Let me show this chart here.
I'm gonna just stop sharing.
Okay.
There you go.
So it's just a really quick glance. This is one of my favorite indicators that combines a few things that just overbought with divergence. So if we have price momentum disagreeing and the market is already registering overbought conditions, I want you to pay attention. I'll highlight some of these lines. Now it can obviously hold, like it can print longer than what we have for like a top. I'm not saying this is going to be a top indicator, but when we print here, we go sideways and we went down. We print here, we go down. We print here, we went down. We print here, we went down, right? We print here, we go sideways, we go down. We didn't print it all through the end of last year, but now looking forward to this, we just printed. So again, it's just an indicator, but I think we go sideways or down. We talked about this last week on a few occasions. I like the 21 period minimum. I like the 50 period minimum. I like the previous all-time highs. I think the market can pull back to 6,000 SPX, maybe 600 SPY, a bit deeper than that. It's still very well supported. I know that Jeffrey had mentioned the 2008 chart last week, right, Alex? where he's like, look at this, and it looked exactly like this, and then 2008 we know ended up going to new lows. I don't think that's this environment. I really don't. Anything can happen, but I don't think that's this environment. I think that right now we have an administration that is so pro growth, that is going to be so pro growth until we have to actually print our way to feel some growth. Like we are so pro hype and pro growth right now that the market doesn't care about anything. And it's like a scary amount of complacency and a scary amount of there's no alternative. And that's fine. But I think that you're still going to have avid buyers on any dip and correction. When things get really ugly would be if something breaks like that's the thing, man. It's like, what breaks it? I just don't know. I don't know what can break it. What's going to break it, Geoff? What's breaking the market?
Did you have an epiphany in the mountains? You went into the mountains and came back?
Well, think about this. I mean, go back to what you were saying. I mean, they don't get a trade deal. I mean, they got handshakes.
Yeah, that's a great point. It could be as simple as that. Great point.
It's as simple as that. I mean, you
to that point, Geoff,
but they just say, well, we're not going to do that. And all of a sudden that deal falls through and you get a kind of a snowball effect. You're going to get this thing tanking off something fierce.
Absolutely. Yeah. If you have a cascading broken trade deals, this thing's toast.
On CNBC today, they were talking about, to that point, Geoff, that I guess these trade deals are all up in the courts, basically. So I mean, I guess if that's maybe a tail risk, if the courts strike them down, if the Supreme Court strikes his ability to make these trade deals down.
Yeah. I mean, that's the thing. And you've got to have approval from Congress with all of these things, I would think. But I mean, I don't play in that arena, so I don't know exactly how that works. But until something's on paper, it's not real. I mean, that's just it. It's just not real. And I mean, somebody earlier was asking about, what's the short-term look at gold. If you look at, let me show you this real quickly. Let me have fun with a couple of charts here. So is that the wrong one? Yep, stop. Is that it? Screen 3. Yeah, there we go. So on the left side, you've got the August contract on gold. On the right side, you have the December contract on gold. The charts look the same. There it is. But you'll notice we're at 33.08 on the August contract. We're at 33.65 on the December contract. So you have a huge markup. Well, when I saw that last week, because we're rolling over to the December contract this week, I thought, okay, time to do what we did last time. We're up here trading at these highs and everything like that. They're going to probably pull the December contract back to where the August contract is. And now you got all this mess over here on the August contract right around this 33.50. Well, now we've gone from 35.09 clear down to 33.65 in the past week. So all they're doing is correcting it back down to numbers that they know. That is not unusual in the gold contracts. I don't know why they do that, but it's just the gold traders out there saying, hey, I don't like the numbers up here. We don't deserve to be at 3,500 because that's an all-time high. We need to be back down to 33.50 where we've been trading for the past 2 months. And so that's what they're doing. They're just kind of pulling this thing back. So anybody who's surprised that gold's getting yanked back in here, that's just what it does. And so I kind of expected that and was kind of hoping to get there because if you can pull back in there, probably a good place to buy it. Just like Chris was saying, I want to pull back in something. And when something's at all-time highs, it's really hard to go out there and just go gung-ho on the thing. So if it can pull back a couple of $100, then yeah, we can probably start looking at scooping stuff up over the next week. But I wouldn't try buying it probably until we get into next week when the August contract is gone. And now we can start looking at just December and start going from there. So it's going to be, and you got the Fed coming out this week, and it's going to affect this also. So I'd be patient this week on gold, just leave it alone and come back next week and go, okay, now where we at? And start going from there.
Are there any levels you're looking at gold? Maybe like 32.
Well, now, if you, for whatever reason, for the past, I'll say year, it likes 50. What I mean by that, 32.50, 33.50, 34.50, 35.50, whatever it is. Mm-hmm. So I would love for it to come back to 32.5 or 32.50. I don't think it'll get below 3,200. But if it does do that, I mean, I'll be buying GLD all I can, probably down in there. Yeah. But right now, being here at 33.65 based off December, I'd really like to see this thing correct back to at least 3,200 before really doing anything.
I'm looking at GLD on the chart. It has fallen below its 50 moving average.
Yeah.
So
Yeah,
It
it's
might
it's
have some more
bouncing back and forth. But as long as, I mean, I think if GLD can stay above the 302 to 305 area, it's still poised to move higher. Now, if it doesn't, it can yank back down to that 298, 297 zone.
Yeah.
Which it wouldn't be all that bad anyway. You'll have gold back down to that 3200, 3250 range if it does that, which is exactly where I wanted it anyway. So but I think right now it's a little overheated. Even silver, no, it jumped up. It almost hit $40 last week when I looked at it on like Wednesday or whatever it was.
LV, yep, it peaked at 30,
Yeah,
36 or so.
yeah.
Under 36.
And so now if it can yank right back down again, on the silver contract, if we come back down to about 35 and a half, it'd be
Yeah.
probably a good spot to scoop that thing up too. I think you'll have SLV kind of testing that 32, 33, 32, 50, 33 area.
Yeah.
So, man, it'd be awesome if it did that. And we can start buying into those things again. But I'm wanting a pullback just as much as Chris is, especially in the I'd love the S&P to dump off about 5% and then go from there.
Exactly.
So,
Geof, can I ask you a question on silver?
yeah.
We had talked about silver before. I have a fair amount of shares in SLV.
So do I.
Do you think that we can go higher than all-time highs in SLV? Obviously, anything is possible, but like the reason I am more bullish on silver than gold is because of the move of previous all-time highs in silver in 2011 and 1980. Those
Yep.
are out there. Like the spot price in silver was up near $50.
Yes.
So I'm trading SLV and I'm kind of marking the same percentage correlation to get my SLV shares up to around $44.
There you go.
If they get there, I'm thinking like, can we go higher than silver all-time highs, or is it? I'm probably going to trail stops to be safe, but like it'd be a pretty amazing story to see silver rip to like $100 spot price and gold to 5,000 spot price. I mean, that would be a ridiculous trade. So do
Well,
you
I
see
think,
silver at all-time highs and higher?
yeah, I think one thing we're going to have is copper getting above $6 to have that happen.
Yeah. Okay.
If we can get copper above $6, I mean, you have to remember silver is both a precious and industrial metal. You have
Correct.
copper that's an industrial metal. You have gold that is a precious metal. So silver's right in the middle of those two. And if you can get copper above $6 and get gold probably trading above 3,600, 3,750, I think silver takes off and hits your 44 easy.
Nice.
And I think right now, I mean, gold is it's up 27% on the year. So, I mean, it needs to just chill out a little bit and, pull back. And next month is a great time to do it. Just let it get hammered a little bit. Same with the S&P, let it get hammered some. And then when we hit September, a brand new quarter, let's go. Let's have a Christmas holiday and rally and go and all that stuff. But right now, I think this market just needs to, get a good dumping in before it takes off.
Yeah.
And
yeah,
I just get scared every time the S&P makes a high. I'm just like, what's driving it? There's nothing driving it.
Right.
And that's the thing that scares me. I mean, there's no catalyst to say we should be making new all-time highs in the S&P. There's nothing out there to say that. And when I don't see that catalyst, then I get really worried. And just like you were saying, I'm selling highs in the S&P. I can't blame you.
Yeah. I mean, it's worked out pretty well. It's like I was 9 for 10 last week and made a nice chunk of profit. I had a quick winner this morning in 10 minutes. It's like, it's just, for me, it's an easy way to calculate it, because if the VIX spikes up, then obviously we're going to see the market flush down. But like day to day, it's like the VIX going from, 17 last week down to 16, down to 15, even sub 15. I'm like, every morning, if I'm just selling, 20 deltas, 15 deltas, 10 deltas, and just watching my price levels, not getting gouged on out of the money pricing, it works. It works actually really, really well. So, and I think inevitably this week, obviously this week it's a lot going on: earnings, Fed, non-farm, what I thought was going to be a big deadline, August 1st, but maybe it's less important. But it's a perfect excuse for a lot of volatility. And the market might have this continued like melt up and pop up on the Fed, and then after the Fed, it fades. Or maybe we just get to the end of the month and we finish the month positive and push, and it's the melt up through all of May. I mean, really, the melt up is, you look at the bottom in April, it's just a giant wick for the monthly candle in April.
Yeah.
All of May, all of June, even into July, we just gone higher and higher and higher. Like July, I think right now is over 3% for the month, and it's like historical averages. Like that's a great push. And I think August, September is due for a pause or pullback. what else would be like I know we have like this potentially financing, like this finance air pocket with the Fed. We've got, all these, I don't know if it's real estate related or just like global debt related, or at least US debt related, in September. But there's a lot of podcasts that are just calling for just permanent bear. Well, I don't think it's that. I don't
Everything's
think it's
gonna end. It's all over.
yeah, it's like enough, man. Like I can't believe that people still give like perma bears the podium to just be bear, 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 when it's like you have been wrong for literally years at a time. And it's like to just jump in and say, I told you. It's like that's not fair, because the whole time the market has found bottoms and melted up. The retail crowd has been rewarded for buying every dip for the last 2 decades, you know?
Yep.
And I guess you take the 2000 bust to the 2008, that was essentially a lost decade. But from 2009's bottom to present, buying dips has been like the greatest thing ever. So the fact that we line up with all these bears is like, and how bad does it get? If the bears come in and actually win for once and we have like a nasty 30, 40, 50% correction, okay. So then what happens? The market probably finds a bottom and builds its way back out, and there's plenty of money to be made. It's just not getting hurt on the wrong side of that move.
Well,
So
that's the loss. The thing about the lost like decade, and I feel like now it's kind of different. I just don't with like I feel like people the U.S. equities are becoming a stand-in for U.S. dollar. That's like my macro sort of high level theory is just that you have to outpace inflation. You have to outpace this debt cycle that the whole world is in, not just America.
it's a break even, Alex. If
Exactly.
you look at like the loss of purchasing power and the money supply compared to the S&P, we're literally like break even. Like
Right.
if you look at how they're correlated, more money supply, more
Is that
S&P
true? Is
to
that
weaker.
actually? Oh wow, that's crazy.
It's very true. And so
Wow.
if you compare like the S&P into gold, you compare S&P into Bitcoin, like they're down, like because
Yeah.
gold is appreciated. And I mean, officially GLD for the last 20 years has now made more gains than the
Oh, yes.
S&P.
Way outperformed the S&P.
Exactly.
Yeah.
So I think that I sense that the world is going to be shifting into more of like assets that appreciate versus fiat. Like we can have like a parallel system where you have like fiat is like the world's checking account that we're just trying to doing its world reserve currencies and its fiat system, and it's the fiat world is, I think everyone's just kind of calling it out right now because it's just more and more obvious that assets like gold and silver as a proxy and now Bitcoin and other things can just pace or outperform. And I mean, the big hedge would be Bitcoin is essentially a hedge against, fiat. And I don't think it's like if one thing crashes, I think they all crash together. So there's no answer for like, oh, just buy Bitcoin. It's like my best friend is a Bitcoin maximalist, and it drives me crazy because it could serve as a hedge, but the amount of disruption and damage and chaos that would ensue if something really happened to like bring the dollar down or bring the US economy down or bring the world economy down, Bitcoin doesn't survive that without having tons and tons of damage along with it,
No, and
So
they've all been pretty correlated. Like,
yeah, at the end of the day, it's all, I mean, the whole system is levered to the teeth, and there always has to be some type of downside protection. I do think that the whole system is also too big to fail. I mean, there's a lot, there's, tens of trillions of dollars out there. There's hundreds of trillions of dollars levered in these markets. So I mean, in a sense, it's too big to fail, but it's going to be like a weird reset of some capacity. But
Well, and
not
another
now.
thing,
I mean, not now. I think we've got years of runway. I think right now, as far as Trump administration having majority, give the administration credit. Things that got passed, whether it's stuff it down your throat and just force it, at least now the market can kind of, I don't know. Maybe it's more forward thinking than 6 to 8 months. Maybe it's now like, yeah, we're forward thinking until midterms of 2026. It's like what can disrupt this market? We're pro growth. We want to see the rates get cut. I don't know if it's going to be the right price action. Maybe the Fed stands in the way of this current administration. There's friction, man. There's a lot of friction, and I think that's why this melt has been so slow. But I just don't see a lot that's like disrupting. I'm not bearish on the economy. I'm not bearish on the markets. I just think a pullback is needed so we can get positioning. I want to position for something better than, like Geof said, I hate buying all-time highs. I don't like all-time highs. It's good that all-time highs typically lead to more all-time highs, but my gosh, man, like just watching little increments every single day. I mean, if you want to buy low, it's hard to buy low when you're sitting at all-time highs every single day.
yeah.
You know?
Jeff?
well, another thing that they've trained people, and I mean, they've had 15 years of training that, you don't go park your money in CDs or bonds or anything like that. And so people have learned to move money into, like you said, other assets. And I think the money market, if you will, has really been thrown to the wayside. I think people have, lost faith in, going to the bank and, parking your money in CDs and getting 6%, a year, or 8% a year, or bonds even 6 or 8% a year. You just can't do it. And so people have learned to say, okay, the heck with that, and they got to go put their money in something. So here's the market. So now they've learned to say, okay, now in the market, what do I put my money in? Do you put it in Bitcoin? Do you put it in gold? Do you put it in silver? Do you put it in some asset that's out there other than those bonds or those CDs? And they have basically ruined that debt market, if you will, just because interest rates have been so low. You can't beat the price of inflation. That's the only way you can make money, is to beat the price of inflation. And they just hadn't been able to do it in those assets, and they still can't do it in those assets. So they're going to go find something else. And I think eventually, I mean, I hate to say it, but I mean, those things might just go by the wayside, go away. I mean, they can't, just because, money is the market, and money is the world, and debt is the world as well. But they can't make money doing it, and they got to find something else. And I think that's one thing you've seen, a big rotation out of those debt assets into other assets. And maybe the debt assets come back. Maybe interest rates are going to go sky high to fight off all the debt that we have around the world. Heck, that should have been done that way a while back, but they just kept interest rates so low for so long that I think then the market got hungry on it. You look at it right now. I mean, if Powell actually came out and said, we might cut rates next time, you'd see this market make new all-time highs again and just take off. And I mean, they're low interest rate hungry in this market is what they are.
Yeah, well, the promise has been there for the last 3 years. I mean, we raised rates super fast coming out of COVID. I mean, we obviously cut rates to near zero through COVID. We raised rates at the fastest pace ever through 2022, and then we started cutting rates slowly. Like last year was like the slow 100 basis points off. But the market, as far as like the housing market, refinancing market, like we've been hoping and wanting and waiting for 3 years to see lower rates, and it still hasn't happened. So that was the other thing, like kind of what would be a major catalyst would be like maybe this big disappointment brewing of like, oh my gosh, we can't refi yet. We're still not there. Like the rates aren't getting any better, blah, blah, blah. Like that's still a big sticking point where it's like you're going to just exhaust the businesses. You're going to exhaust the consumer. They're going to be stretched so thin where it's like, what do we do? We bite the bullet and just refi at this crazy high price, and now we can't afford to really stay in, or now our borrowing costs are way more of a headache than it was if it was cheap money like it was the last decade plus.
Right.
But we don't have that yet, and I think that's not something the market's necessarily pricing in yet. And so again, we keep talking. It's like there's a lot of caution. I still think the market is pretty well supported through. Obviously, we get through the dip in April. A pullback to 6,000 S&P is totally understandable. A pullback even to 5,800 is totally understandable. I think we talked about this a little bit last week, Alex, when Jeffrey was on. I think 5,700 would be like, be a little bit more cautious if we're breaching 5,700. But I think like maybe a little rally in the dollar could make some sense. A little rally in bonds could make some sense if we have some risk off tone here in the next maybe 30 to 60 days. But I still think the market's going to find a way to melt up, man.
We know the Trump puts at 49.50. One thing one thing I want to say is, I mean, I guess kind of we haven't talked about this. I feel like a lot of this market exuberance is driven by AI. And
the hype.
If AI really, I mean, I don't think this is true because I use it every day. It is pretty cool. Maybe not quite as cool as they're thinking it's going to be, but I mean, if it turns out to be kind of just like a rubber duck, that's another tail risk. That's what I think that was what would take some of the wind out of these sales here. But again, I'm not sure. I don't think we're quite at like .com level of exuberance in terms of actually applicability and utility of AI. I mean, it is very useful already. So
can I ask a question on AI for you guys?
Yeah.
How disruptive do you think AI is going to be in the next 5 to 10 years?
Well, you have the edge cases that it's like, okay, you have the people who are saying it's you can't even write a good story. It's not going to do anything. Then you have the other people who are like, we're going to be, birthing our AI overlords and be the subservient race to a mechanized, human super being. Well, I don't know. I mean, I know that's a crappy answer. I just,
Yeah.
I don't know if we're gonna go to the, the like matrix level where we're just like in vats next year.
Yeah. Well, what I think, go ahead, Jeff, your opinion, and then I just have some
Yeah.
thoughts on it.
The problem, well, I mean, of course, I have a problem with a lot of things, but the problem I have with AI, it's only as good as what's programmed into it. And what I mean by that is when you initially start, an AI program, you can tell it just to only look on Google and nothing else. Or you can tell it to only go look on, DuckDuckGo and nothing else. And if they make it to where it's looking at, all things, so you can get all opinions and everything like that, that's one thing. But if you're just honing it down to just look at this stuff and this stuff only, you can only look at, the London Medical School for all medical stuff, but not any of the US medical schools or anything like that. That's the
Right.
thing that you don't know what's programmed into the AI. And so I get a little worried when people start, bowing to the AI gods, as Alex has here, just because do you have all the information globbed in there, and it has to make a deductive reasoning to say, okay, this is what it probably should be from deductive reasoning. Can it do deductive reasoning? That's the thing, because we have to do that every day. We have to deduct, hey, is it this equals this, or is it that equals that, or it might be this way also. I have to make a choice. The market can do three things. It can go up, it can go down, or it can go sideways. There it is. Long, short, or stay out. And so,
Yeah.
but if you can eliminate one of those, you're doing really, really good. And that's the one thing that I get worried about AI, is that can it actually do that? Now, if you're just looking at scientific kind of stuff, that's one thing. But if you're looking at, hey, write this paper for me, well, it might be totally biased toward one side and not the other side or something like that. And that's the thing that I worry about, is how it's actually being programmed. Now, longer term, do they fix all that? Maybe they do. And I hope they do. But right now, you can get some really weird. I mean, even from, you go Google something and it throws that little AI paragraph at the top up there.
Right.
You read that and you go, where the hell did that come from?
It's all
Yeah.
it's kind of fake, and the
Yeah.
AI will start feeding itself off of other AI, which is printing out fake stuff too. So it becomes a snowball effect of fake. I actually have an interesting anecdote to that. So I took my wife. There's this like essayist. He's kind of David Sedaris.
Oh
And
yeah.
yeah, you know him. So he was
Yeah, but his books are great. He's funny.
yeah.
Yeah.
So he was doing a tour. We went to the local place and we're like listening to him, and he was reading his essays. And the final thing that he did was he started talking about AI, and someone a reader had come up to him at a tour and said, "Hey, this AI, I told this AI, hey, write a story about running out of toilet paper in a public bathroom in the style of David Sedaris." And he read what the AI had written. It was so bad. And then he did his version of what that story would be. And it was like hilarious and incredible, but it showed you just how infantile, and it's a veneer, right? It's like on it's very top level, I think, right now. It's great for code. I use it for code. That's what I use AI
Right.
for.
For coding and stuff like that, it's awesome.
But
But
actually digging down, it's not, look, this is not Skynet, folks. Not
yeah,
like they're not the Terminator level.
Not yet. Well, so the reason I brought that up is so Grok 4, for example, is apparently enough knowledge to have like the human capacity of like PhDs and everything knowledge based. It's like some of the AI language models have enough of that knowledge to be at like a PhD level for like all subject matter. And so at that point, we kind of run out of like human knowledge capacity, or you can tap into those. And you guys are right, like it's all at how it's coded. I mean, I had some fun with AI. This was like a live session I did a few weeks ago, and I wanted to have like my YouTube thumbnail change my shirt. I'm like, I've got a couple professional shots. I'm like, just change my shirt. Well, it changes my face. I'm like, don't change
Oh,
my
yeah.
face. Don't touch my glasses. Don't touch my. And it couldn't do it. It's like it was Microsoft Copilot. It's like, we won't touch the face. We'll do it exactly what you said. Just change the shirt. It wasn't my face. So I'm like, I get there's like that you can poke holes, but I think the scary part is the iterations are making like leaps and bounds. And I do think that ultimately technology does go really fast. What is concerning to me is if we're feeding this AI that is like all knowing as opposed to task oriented. right? If we fed like a scientific based AI that's like, look, give us all these like, you know, compositions for vaccines or compositions for, you know, cancer, like anything that's like improve science, improve healthcare, improve it, like give it a task and let it like deep dive and mine into like solving something instead of, I feel like we're building like this general purpose, like type in whatever you want prompt and just let AI kind of work its magic. And you're going to see there's a lot of there's a lot of false data that's coming at you, or you take it like, I mean, for the most part, our research is lazy, right? I've got a master's. I still don't deep dive in all my research. It's like I take, you know, maybe 3-4 sources and try to form an opinion. I listen to a lot, try to form opinions, but that's a little bit, that's like pretty surface level. I mean, if you just search something and it's like an AI generated fact, it's like, here's an example. My dog this weekend, it's like he had a little like hot spot in his eye, and it's like, is it allergies? Is it a hot spot? And it's like, I mean, some of the pictures they were showing of these dogs, I'm like, oh my gosh, he's going to lose like all of his hair. Maybe it's like take him to the vet immediately. Is it mange? And you know,
The
it's
WebMD effect.
yeah, it's all bad, right? So I mean, I don't know. There's always like, if you just think about like, you type in one thing, be willing to go like maybe 2, 3, 4 degrees deeper. Just be like, if you really care about something and make a, you know, a somewhat of a opinion on it, then at least dive a little bit deeper than just surface level search, you know. So, but I'm curious like how fast it evolves, because if we built a task oriented AI, I think it could be used for good. But yeah, the future stuff, it's like if we can make iterations that are just exponentially improving, all of a sudden they're building like synthetic AI feeds and they're, you know, doing data sets that are just coming out of nowhere. I mean, my concern market wise would be that everything that's going to be AI and like AI analysis is all going to say the same thing. What happens to contrarians at that point? I think the contrarian play is like going to be the biggest play, because everything is just one. It's like the whole boat is what AI says. And if that's wrong, or like there's a contrarian side of that, it's going to be, there's nobody on that side. It could be like this massive liquidity flip. So I don't know. It's just stuff thinking about this in context of the markets. Um, it's going to be interesting to navigate. But man, this market is so hyped on it, isn't it? Like where we're at right now, it's like everything's so hyped on AI, like it's the greatest thing ever. It's like, I think it's coming for a lot of people's jobs, and that's like the most discouraging thing. Is like what it ultimately does is causes a ton of potential profit margins and a great run that ultimately leads to like universal basic income, and corporate, yeah, like corporate tax brackets are going to have to be so high just to like foot the bill for people that can't afford to work anymore, or people that can't survive because they've all lost their jobs. And I hope we never get to that, because I don't want to, you know, bet on America and think that's our future. But that's what would be scary, is like we're so corporate greed driven that it's like, yeah, we're going to not hire anybody. We're going to do everything with less and just do profit margins galore. And ultimately it's like, well, now we just displaced millions and millions of workers. We're in a hard recession. Nobody's working anymore. Nobody has a job or a purpose. Ugh, that's the stuff that I'm like, that's so depressing. So I'm trying not to get there. Like, I don't want my, that's really, really sad.
It's so, you know, some of my software tech friends are worried, but like, so for instance, they used to pay like Apple engineers to build iPhone apps, like, you know, studios, just iPhone studios, right? 500K a year, 400K a year, you know, something crazy, right? I built this like unusual options flow little app that's not on my, it's just on my computer for now, but want to deploy it shortly to everybody who's on my Telegram. Shameless plug, but I built this in 5 hours.
That's awesome.
I mean, it's crazy.
Wow.
Just with this, and this is just with Claude, right? So it's like, and you can go here. I mean, you can see all this stuff. You can see analytics. You can see all this stuff. And this is just me talking to Claude, which is, you know, an AI,
Right.
and just being like, oh, can you make this? Hook it up to the API for, you know. So it's crazy stuff. It's crazy stuff. I do want to get to, I mean, this is a big earnings. We haven't really talked about earnings, but this is one of the biggest weeks in earnings this quarter. And maybe the biggest week, probably. I have a question. I had a question to both of you guys. What matters the most this week, right? What matters the most? What tickers are going to matter the most? What companies are going to matter the most for what happens to the market, and for also just kind of divining what's happening with the market, you know, what's happening with the economy maybe, or where we go from here. I'm going to go ahead and just, where's this thing? So this week we have Waste Management and Whirlpool. So I'm just kidding. We got Spotify, we got you know, ARM,
We got Mag 7, dude. That's what matters to me.
Amazon, Apple,
Yep.
it's just Meta.
And Bitcoin, Coinbase. So on Thursday after close,
Yeah.
Apple, Amazon, Strategy, which is MicroStrategy, and Coinbase. Those are all going to be really interesting reads. I was just checking this out. So the ticker MAGS, we're trading at 58.11 with the recent highs at 58.79. That's also a pretty good one to kind of hit the tops and then fade, in my opinion. If we're going to have a pullback, MAGS pulls back, it's going to drag the market with it. Maybe like a nice pop, but the market just kind of fades and pauses for at least a correction. 5%, 5 to 10%. That's kind of my window of correction. Mags could lead the way, roll over post Fed. I don't really know, but what I am doing, I told this to traders this morning in my morning session. I'm essentially going to like the last 10, 15 earnings reports. I'm taking the average on like the high end of what the market's done earnings report wise, and I'm looking to fill at a high credit and fade any good earnings print. Like that's what I'm trying to do. I want, like, if I'm going $5 wide on a credit spread, I want $3 or better on a credit. If it fills me, fill me high and fade. Fill me high and fade. If it doesn't get filled, it's just a cancel trade.
Yeah.
But if it's like if the market pops, I want that to like fade immediately. And I'm trying to fade some of these earnings prints.
You're doing that on the individual tickers?
Individual tickers. Yep.
Yeah.
So I posted 4 this morning in my news breakers. And some of these honestly like may not even fill. It's like maybe wishful thinking, but I refuse to like play this like, oh, big move here. It's like there's a lot of earnings that can be price sensitive, but this year so far, most of the moves have been within the expected range. So we're not getting like the big breakout moves beyond what the market makers are already creating, those plus minuses. And I mean, I look back mostly about 10 to 15 prints and see what happened on earnings and then post earnings up to 8 to 13 days. Like, do we hit expected moves? Oftentimes we do. It's like, and that's the math I use to kind of price out earnings. But to me right now, it's like I told you guys earlier, like I'm literally selling and fading the S&P every single day. If I get a good enough fill, I'm going to fade it. I'm going to fade it. I'm going to fade it. So earnings wise, even if we have a pop, well, that could gap the S&P up, but it's like, I still want to fade it.
Yeah.
based on the VIX, I'm still going to fade it, man. Until we get a correction, I'm just going to fade it for a little bit.
You see that? That's crazy right there. That was a big old.
So do you expect the mags to come down and fill that gap right around 54 or whatever that price was down there?
That'd be a big fall if they did. I could see this. We're almost right there to kind of tap those highs at 58.79. I could see the mags popping up here, filling or tapping the all-time highs. Maybe between like $59 to $60 topping. And if you look at the mags, we talked about this last week, like the 20 period moving average, the 21 period moving average, the amount of days we're above it. We're now spending, I want to say like close to 50, 60 days. I mean, we're 54 bars above on mags. We're 60 plus days on the NASDAQ. We're creeping up 60 plus bars on the S&P. Pull back to a 21 period is needed. So to your question, Geof, like 56.40 is my pullback on mags, or 54.50 is my pullback on mags. Like sooner than later, just because that's a 21 period and a 50 period. It's the same to me as looking at the S&P and the NASDAQ, just pulling back to those moving averages.
Cool.
Yeah.
So so it's more like, do we have a pop and then a fade versus a gap lower that like maybe bottoms out a little bit more, and then either way, it's like I'm going to buy the dip. It's just, how do I position for it? Do I have to see the market go up first and then that fades, or do we like gap, flush a little bit lower, and then we start to buy? To me, S&P, that mags, it's like I love that 54 level. To me, that'd be the equivalent of roughly where was that ceasefire gap in the SPX? That'd be like the ceasefire gap. That'd be around 60-50 or so on SPX. So if mags comes down to 54, I think SPX is going to be down to like maybe 6,100, maybe 6,000 area. Because mags is still like massive market cap, and this year has not been the Mag 7. This year's been like the what? Trifecta. You've got Meta, Microsoft, and what?
Well,
like Apple's not the same.
Apple
right? Yeah, like Apple's not the same, Google's not the same. Meta, Microsoft have been great. Nvidia's been great. So that's 3. Like those top 3 have been crushing it. Everything else is kind of wait and see.
Netflix,
Amazon's doing okay.
I guess not. I guess that's kind of
Netflix fade. Yeah, those are pretty good decline off those highs.
Yeah, it was doing good.
It was. Anyone watch Happy Gilmore 2 this weekend?
Oh no, was it good?
I'll say it's watchable. I don't want to overhype it. I'm not for or against it, but we had it. So usually I play Fortnite Fridays with my buddies, and we decided to swap that for watching Happy Gilmore 2, and it was watchable. I'm curious what everyone thinks about it. If you guys watch it, hit me up on Slack or whatever. I'm just curious because I laughed twice, and it was watchable.
That's bad.
I know I'm not saying it's bad though. It's like it was watchable, but it's like two parts really like, okay, that was funny, and then the rest was just all right. I'll watch it. So,
Okay,
but it wasn't as bad as the Mike Tyson Jake Paul fight.
Okay, well, that's a medium bar.
Yeah, exactly. I know it's a low bar. To be honest, it's low. It's low.
We did have Merceline here. I don't know if she's still here. She asked this a while ago. Merceline, you still here? Yeah, you are. Asking about Apple. Merceline, I think it's going to be pretty boring. I think Apple's going to crush earnings because they always do, and it's kind of just gonna. I mean, it did break above this little resistance line I had here. I think it's. I mean, I think it's probably just gonna not do much. I got to be honest. It's kind of a long term. Until something changes bearish on Apple. I don't think this earnings call is going to fundamentally change this price action that's happening right here. We've had a little bounce off. Probably going to maybe drift higher into 220s again. I could see, but it's going to be just a grind like it has been these past 2 weeks. Any idea? Any thoughts, Chris, Jeff, about Apple?
I think Apple's a must stay above the 190.
Yeah.
If we break below 190, Apple has a lot of potential pain ahead, and I think that'd be awful. But I'm hoping, I think you might have talked about this last week, Alex, but or maybe I listened to it on a podcast. Apple's never really been a leader in anything. They just end up taking good ideas and making them Apple-y and better. Like, people love Apple for what they end up creating, but I mean, I just wonder if everything's so hyped around AI, it's like, well, what's Apple going to do? Because right now, aren't they pairing with, they're partnering with Microsoft to improve their AI deliverables. But I'm that's crazy. It's not even like the Apple ecosystem. They're opening their ecosystem. They're doing things that are so against the grain. Yeah, that I'm like, maybe Tim Cook is not the guy to actually bring Apple to promised land.
Yeah, he's no Steve Jobs. He is no Steve Jobs.
He's an operator. He's an operator. He's a good operator, but he's not the person to reignite that fire. So they're gonna have to. I foresee his tenure is gonna end in probably 3 to 5 years, maybe even less. Honestly, I don't know if Apple can handle another just 5 years of. I mean, I guess it did great. Every stock did. Recently every last year.
Yeah, but what phone do you guys have? I'm just curious.
I have an iPhone, but it's an S from 4 years.
I've got the 12, dude. I'm still rocking the 12 until my battery literally dies. I'm going to keep this thing until I hate planned obsolescence. And it's I'm no person that wants to line up and have, the newest phone. It's I don't care. I can't believe we're paying $1,000 for a phone now. That's oh, the camera's a little bit better. Cool.
Yeah.
I got a Samsung S10e.
Yeah,
that's
I don't
where
know
all
what that
the
means.
innovation is on the Samsung stuff phones. I feel like the South Korean phones are just crushing it.
Yeah, I do Android.
Yeah. I can't stand the interface for Android. It's too messy for me. I just I can't.
Well, my wife, if it has an I in front of it, she owns it. I mean, and me on the other hand, I do Windows and I do Android. And so I know the best of both worlds just because I mess with all of them. I don't like the iPhone just because it limits me to a lot of things. I have an iPad and I throw it, on the ground about 50 times a week just because I won't do it and I have to get my PC out or my phone out to do something.
You're an engineer, dude. I feel like every single engineer I know uses an Android. It's something about your mind.
Yeah.
I swear.
There's just some things you want to get done, and Apple. That's the problem with Apple. Apple has gone to the the creative movie industry kind of thing, where Microsoft has always been business and engineering and all that kind of stuff. If you want to look at it that way, but there's a lot of things that you can do on a PC that you can't do on a Mac, and it's just a totally different environment. And I mean, even if you look at programmers, of course, most of them just run Linux a lot of times, which is what Apple is based off of. But outside of that, I think there's a lot of things that people, on the engineering side, like about it. But there are a lot of things on the Apple side I do like. There are some really cool things that Apple's made and created, and sometimes I just prefer it. But for the most part, my wife just this is doing this, and I go in there and I try to figure it out for her. So,
Yeah.
But that's
You
that's
just throw it on the ground for it, Jeff?
no, it's her stuff. I have to be nice. So I have to love her stuff. I mean, like, everybody, is cut the cable these days. Well, we're using what? An Apple TV. So
Yeah. Stream,
I mean,
stream. It's the same price as cable.
exactly.
I
So
do. I love I love all this tech innovation. We got back to cable. Like,
Yeah, right.
yeah.
Speaking of, I put a trade on Roku today. Speaking of cutting the cord.
Yeah.
Okay.
Yeah.
We've traded Roku in some of my services before. We had some
Yeah.
good ones. I forget Wave Trader. I think we did. Ooh, that's a nice little breakout.
Right.
What are you doing?
I'm doing the same thing. I'm trying to fade. If we get a big pop in earnings, I'm gonna fade it.
Oh yeah, there you go. That earnings.
Yep. So technical levels on Apple real quick. Am I off base with a 190? I think that, we had lows in 170s. I've got ratio spreads on Apple. I think Alex last week, you said, like, I'd love to see Apple below 170. It's like, I'll own shares below 170 with a ratio spread, but I think 190 is kind of the critical support. You got that 190, 195 zone. If we stay above there,
in that band since
yeah.
April?
Since the April low, it's like, but now we're crossing above. I could see us like kind of troughing here if there's going to be something good coming from Apple. But I think generally speaking, if the market's going to be somewhat resilient, Apple's going to stay pretty well supported.
Well, we have
right?
the 50, we have the 21, the 9, 50. It's all above that. So
Stacked up, yeah.
It could just, that's what I'm saying, Marceline. Like, it did break above this resistance line too, this price action line. So it's like, I do think the earnings are going to be green. Like, when does Apple not have a green earnings? You have to go all the way back to like 2023.
Mm-hmm.
But
one thing I would say about it, if they fail to bust that 216, 217, whatever, if they fail to bust that off their earnings, they're going to sell them off, period.
Interesting. Okay. So 216, we're watching 216, 195. We'll see what happens.
Yeah, what was that? That was at the beginning. It was the beginning of this month. They jumped up real high and they failed back.
They faded right
that
down
that
there,
red bar right there.
Yeah.
I think if they fail to bust that, they go down.
Yeah, we actually had I think I sent out a trade on Apple for one of my services, and I was like, it was up like 20%, and I was like, I'll get out. And I was like, glad I did, because it really it was over here and just faded. And then I think it would have been a losing trade, but we got lucky with that instead of trying to hold and get greedy. But it did grind back over there slowly, so we bounced off of this 213.82 line. I don't know. Well, it'll be interesting to see again, like how, again, they're gonna, I predict, this is my prediction, they're gonna beat on earnings and revenue, earnings per share and revenue. What's their forward-looking guidance? It'll probably be like, we're improving the, interest rates we get on our Apple cards, and Wall Street loves it, and just keeps on grinding slowly higher with the, if the general market continues that way, like Chris said.
Yeah. Let me see if I can find some big liquidity levels. There's a big 220 this week. I could see us tapping 220 this week. So and again, Jeff says if it gets above 216, I say it like gets to 220 and fades. I think that's a very possible price action play this week. So, but yeah, I've been looking at something like 220 is my big outlier where it's like, yeah, I could see the volume flows kind of going that way, liquidity levels and gamma going that way. But I would say to get there, it's like Apple earnings is going to be, is it Wednesday or Thursday for Apple?
Thursday after close.
Thursday. Okay. So Thursday after close, you got Apple, Amazon, MicroStrategy, Coinbase. Okay. So really,
that's a huge day, man.
That's a huge day. Plus you got the Fed on Wednesday, which will make, Wednesday to Thursday, Friday, just like a big potential window of volatility.
Meta, Microsoft on Wednesday, and Robinhood, another big one.
Yeah. It's like 790 companies this week that are, it's a lot of market cap. Yeah, I'm trying to, it's hard to go out a week and I don't know. I obviously want to price in something on Apple. I probably will. I'll probably price out like the Mag 7 and a couple of others, but I typically look at pricing in earnings plays that are like highly earnings sensitive, because then you get the ability to kind of hit or exceed that expected move. But I'm taking a kind of a different angle, which is I just want to fade a lot of pops to the upside.
In one of my stories, we just do calendar spreads and try and just find
that's a great trade.
The lowest possible, most boring stocks. And because
how far do you go out in those calendars, Alex?
Weeklies.
Okay, that's good.
Yeah,
I like
that. So open it up prior to the day. If they report after hours, you open it up on Tuesday after hours. You open it up on Tuesday, and then you see like a quick little volatility drain.
Yep.
You're not going for anything special, but like,
So with Visa and MasterCard coming out, you short them because of the smart coin thing?
I mean, I
Well,
was
no,
thinking
because
about
they're
that.
like in the space now. Like they're trying to offer like crypto related payments, or they're trying to tap into that somehow. So I don't think they'll.
Oh,
I think it's more maybe the banks get hurt on the stablecoin stuff versus like Visa, Mastercard, Amex. I don't know. It's a tough one. And
yeah.
we talked about this last week, but I think the whole idea of the stablecoin stuff is just to get it's like an auto bid for treasuries.
Yeah.
It's really like it's a engineered way to force people to buy more treasuries because that's
It's
what's backing
beautiful,
stablecoins.
beautiful Ponzi
Right.
scheme if it works.
Yeah.
Yeah, I mean, Wells Fargo, we were watching this. I really thought it could break. I mean, it really wanted to break over this line. Financials in general, banks. I mean, what do you guys think longest term? I don't feel like they're in risk. I mean, they're all pretty solid. They're all performing
Yeah.
pretty well.
I mean, JP Morgan's at highs, Bank of
Yeah,
America's sniffing all-time highs. Like
yeah.
it's hard to want to fade. I mean, it's hard to want to fade
Everything's
them.
all-time high. What is not at all-time highs? Chevron. What
No,
I want to ask you about, Jeff? We do have some oil
Chevron
companies.
and Exxon on Friday, yeah.
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 So
Oh.
and they sold off, got pretty nicely there. What do you foresee on these guys?
Well, I think their revenues are going to be good, flat out. I mean, if you look at, I mean, I think what is it, Fang, Diamondback Energy comes out, I think it is this week. Also, and I think most of these guys will make money, because crude oil has popped up a little bit and everything like that. So I think they all make money and everything like that. I don't think they hit like earning, what is that? Earnings whispers or little whisper number. I don't think they'll do that, but I think they'll make money and they'll be solid. And after that, they'll jiggle, and then they'll just kind of go away. That's kind of what they'll do, I think, this time around.
So there's nothing there for a trade for going
I
long on these.
I really don't. If you're wanting to, just kind of trade them on a short-term basis, and this is the easiest way of doing it, when their earnings come out, they're always pre-market or post-market, and these guys are usually pre-market. Just look at their earnings bar, you'll see the wiggle, and then wait till the opening bell the next day. If they can take out that high or take out that low, trade it
Mm,
that way.
okay.
Otherwise, I don't think there's a big long-term play in it. There's too much uncertainty in the crude oil market right now. Right now, I mean, I'll give crude oil this. It's staying above $65 there. Yay. But they can't seem to get above really the 67 and a half, $70 area.
Wow, look at that. That's some hard resistance on
Oh
that.
yeah. Yeah, it's just they just can't do it. But if they can get above 67 and a half, okay, I'll give them that much. But you got 65 to 67. It's a $2.50 range in crude.
Yeah.
It just can't go anywhere, and there's too much
What's the
uncertainty.
problem? It's just uncertainty.
Well, you've got drill baby drill up here in Washington, and you've got the Middle East over here going at it and all this good stuff. So it doesn't know whether it needs to be going up or going down right now, and that's the biggest problem. And so until that can be reconciled, you know, Trump wants crude oil back down to $45. That's what he wants. And that 40 to $50 area is very, very critical in the crude oil market. The Permian Basin, they can make money as long as it stays above $41. A lot of people can't make money unless it stays above $50. So the frackers out there, they can't make money unless it stays above 60. So you've got a real critical area between 40 and $60 in crude, and they don't want it down there. And so they've cut production just because of that. And they don't want crude oil back down to that $45 area or $40 or what was it, $28. And in fact, check this. I mean, I'm sure people heard this, and no, that's not it. I want a different one.
Do you want to share your screen?
Yeah, I will here just a second. Let me find it real quick.
Yeah.
I think I grabbed the wrong
That's
one.
crazy. I love this COVID $8. This April 20.
Yeah.
So
One of the best buys in COVID.
yeah, this is a beautiful. I took this picture just because I loved it so much, and so here it is. Ta-da! This is crude oil back on April 20th of 2020. It went negative $37 at the close. So they don't want that to happen. And but
Yeah.
that's was the production, Trump was doing. If you go to the current contract on this at the time, you can see it over here on this little quote page. This is the K contract. That was the May contract that was negative. But if you look at the June contract, it was at 21 bucks. But still, it's $20 crude oil. And that just kills every company out there. And they don't want that. They don't want it back down here where Trump had it.
Right.
And so they're fighting them. And I think that fight right now is saying we're not going to produce more because we don't want crude oil down there. And he's saying produce more, get crude down there because it helps everybody. And so you kill one industry and and help the administration out and help all the people out. Well, that's the thing. So I think there's a fight right now in this area, and the crude oil guys are just like, well, we're just going to keep making money because we're not going to produce anymore. I mean, if you look at the rig count's actually dropping. Well, the rig count ought to be going up if we're producing more oil, right? But rig counts are dropping. And so you can kind of watch that. If you go to like investing.com, you'll see the Baker Hughes rig count. And you can see that just slowly coming down. It's come from about 575 down to about 535. And I'm just like, we're losing rigs. And we shouldn't be losing rigs if we're going to be producing more oil. So I think those guys out there don't want to produce more oil. And because it'll hurt the price of oil and it hurts them. So I think they still make money. I don't think there's going to be a lot of hype out there. The big thing is what natural gas does. If we actually start shipping a whole lot more natural gas, what was it, $270 billion worth to Europe or whatever they agreed to with a little handshake over the weekend, then yeah, you see natural gas prices start kind of moving back up. You'll see, Diamondback Energy, One Oak, OKE, and all that stuff starting to move higher. And I think it'll help those companies a lot. But your Exxons and your Chevrons and stuff like that, it doesn't affect them hardly at all. So I think that's the battle that you're seeing in crude. That's why you have this little tight band that is just hanging around in. And it's a great market to sell call spreads or put spreads in right now. You can sell all of I mean, this ought to be Chris's just love it to death market. Just because it's not going anywhere. And you can get premium for it. So
which ones have good premiums? Chevron? Let's see. On the tickers, on the market itself.
Market itself right now is really ripe for selling calls. The call premium is great on so many tickers right now.
Yeah. It is. I mean, it is just right to just keep selling call spreads. And I use XOP, USO. I use all those things because it just kind of grabs them all and says there. And one thing that's really cool about that, if you don't want to take a whole lot of risk, you can do like $1 or 50-cent wide spreads if you want to. I mean, that's what's really neat about it. Yeah. So, but yeah, I mean, there's that market right now is not one to jump up and down and scream about, leave it alone, or just start selling premium. It is a premium market at this point in time.
Very, very good stuff. All right, folks. Well, it is 12:10. Thank you so much, everyone, for showing up to Profit Panel. Hope you got a lot out of it. Let us know whatever you want us to cover, and always come back tomorrow. We do this every day the markets are open. So, except Wednesday, we will not be here Wednesday. We're all doing a roundtable, so that's going to be pretty cool. Talking about some very, very timely information. So you'll be getting messages about that. Make sure you show up to that. But Geof and Chris, thank you so much, guys. It's always
we'll see y'all soon. This is a wild week. Just be ready to buckle up, and I mean, either sit back and just watch it with a bowl of popcorn, or if you're in the trenches, like, just be careful. There's going to be a lot of swings this week that you might not see coming with earnings and Fed and non-farm and everything as we go into like the end of the month. It's been a pretty noticeable melt up these last like 30 days, 60 days. It's been harder and harder to stretch higher with any conviction, but market's still 1.5% last week. It just grinds. So I'm just curious, everyone else, we talk about this in 2 weeks, guys, but like, if we have a correction, I'm curious what the why is. We're throwing all these reasons, but something's going to stick. We'll have a pullback. I'm ready for it. I've got some hedges in, but it's mostly like just trying to be opportunistic by the dip. So this will be a great week to tune in for everything. Profit panels, your services. I'm sure we're all going to have some great trades lined up this week. So have fun.
Absolutely. Thank you both.
All right, thanks, guys. Bye.